Ahead of the open, we are calling the Australian market down 0.2% at 4960. This is obviously quite surprising given the strength we saw in US markets. But of course, with the US dollar looking like it's coming back to life, it generally does have an impact on the risk space. We'll probably see commodities struggle in the near term as Kiwi repricing continues to come into the market, particularly with US data continuing to shoot the lights at the moment. We did see, of course, consumer confidence pop to over a 5-year high, and of course the Case-Shiller home price index also showing that the US is ticking along just well on the property side of things. Now, of course, we've got BHP's ADR pointing to a 1% gain. This is after yesterday's slide, but of course, with iron ore prices slumping to 117.90, down well over 2%, this really does bring into question whether or not these iron ore names can hold on to these early gains. Of course, we did see their London-listed stock trade fairly well, up around 0.5%, but local investors will doubt this given the weakness in iron ore prices. At the same time, the strength in the US dollar and Kiwi repricing really did weigh on gold prices. This would probably continue to see the local gold names under pressure. We haven't seen them shine for a while, and the trend is likely to continue in the short term. Apart from the resource names, we'll probably have to keep a close eye on cab charge. Of course, it slid quite significantly yesterday on the back of those changes to the taxi industry, and at the same time, we've already started hearing from brokers downgrade the stock. Deutsche Bank's come out and slashed its rating on the stock to a sell from a hold. But it really does bring into question why some of these brokers have waited so long to slash cab charge, given that some of these changes had been flagged for a while, and most in the marketplace were well aware of the changes that were coming to the taxi industry. We'll probably have to also keep a close eye on the building stocks. Of course, we've got construction work done and new home sales data due out in the local market today, so keep a close eye on James Hardie and Boral. That should make for an interesting session. We also have Aristocrat Leisure's first half earnings. At the same time, regionally, we've got another fairly big day for Japan. They've got the BOJ Governor Haruhiko Kuroda on the wires at about 10 a.m. this morning. At the same time, we've got Japan retail sales due out. So while he's not expected to say anything groundbreaking, it's always important to approach Japan data cautiously, as Haruhiko Kuroda's comments generally move the market quite a bit. We've already seen the dollar yen enjoy a nice move upwards given the strength in the US dollar. It's trading at around 102.50 now, which is a big change from where it was a few days ago when the dollar yen had dropped below 101 and looked like it might test that 100 level again in the short term. So this should make for an interesting session for the Nikkei as well. It's now back above 14,000, and we really need to see a little bit of consolidation above that level to really reaffirm sort of confidence in investors' minds. Of course, most traders will still be looking to accumulate the Nikkei on any weakness, so this should play out fairly well for Japan in the short term. It might be a healthy consolidation and should lift it going forward. At the same time, I think US investors are starting to accept the fact that Kiwi tapering off is going to happen. But with Kiwi tapering off happening at the same time, it means US economic data is on its way up, which is always a positive going forward. It will be good to see the US economy start to stand on its own 2 feet again without the assistance of the Fed, and I think investors are starting to see it that way as well.